Welcome, welcome, welcome. We'll be starting very soon today. All right. Today, it's quite an interesting day. What do we have? What do we have? What do we have? What do we have? Okay, so I am in this trade, GBPUSD. Right now, I don't really trade gold as much. Uh, GBPUSD. So I think that's the trade. I'm long, I'm bullish, and as per market structure, I'm not looking at I'm looking at taking my profit somewhere around 1.34816, around that zone. But today we are going to be talking about something very interesting. It's been a while I've been active on this page, but trading still goes on, right? If you want me to look at a particular chart, just let me know. Just drop a comment and we're gonna be active there. So right now I'm just gonna be talking about market structure. We'll also just watch this. And first of all, I have to check if there's any news in the New York session. And usually I use more I use financial juice. Most people use uh Forex factory. But then I'm just comfortable using financial juice, you know. President Donald Trump cares that Israel Prime Minister Benjamin during a roughly 15-minute phone call on Monday. Okay, just normal Trump things. So we have a news on GBP which we are currently in a trade. So the governor will be speaking. Governor Andrew Bailey. Alright. Now we can also look on financial G's. And then we have here Bank of England's Governor Bailey speaks. Which over here is not even a red folder news. I don't think so. Okay, so I think it is. All these ones are just high impact news. So this financial G is one of the platforms I use, and then I think it's very cool. I use the free version. You can also consider getting the full version or going for the paid version. So today we are just going to talk about market structure. Then I have some few points that we're going to look at what our trade is in. So after that, then I'm going to show you how to get the market structure, how to find the market structure. It's quite simple, but most people complicate things, as per my understanding. It's quite simple, but most people complicate things. So market structure is basically the foundation of every trade. Every trade I take, the structure has to be set. Now there are two things that comes in play when you are trading. You are looking at two things: liquidity and market structure. Liquidity and market structure. Yeah, liquidity and market structure. One of the biggest mistakes new traders make is focusing on indicators before learning how price actually moves. And it's a problem for new traders. For me here, I have two indicators that I'm using right now. I have the kill zones, which is like a sessions indicator. So it tells me which session is open, and then I just use that. There's also another indicator that I use, not anything crazy. Now the problem with indicators, some indicators are using price after it reads. Now when price is done reading, and then they have to take that information and then process it and then give you an outcome based on what has been programmed into that indicator. So you realize that some indicators repaint, right? For example, if I am to use an indicator in this particular trade that I am in, probably that indicator would have told me to sell somewhere here. Somewhere here. So that's one of the things with indicators. But if you know the overall market structure, let me use black for this. If you know the overall market structure, you know that what this is still a buy, and I've been in this buy for, let's say, 8 a.m. and then it's now 1:30, 1:40. Quite a long time, right? There's a lot of all right. And this market has been consolidating, so most likely there's liquidity down here for my guys that really understand what we're doing. Oh yes, there's liquidity down here. Anywhere there's a consolidation, there's an accumulation, there's liquidity down there. So this whole zone is consolidated, what some people will call a channel, a wedge. For my chart pattern guys, they have a lot of names for these things, right? So now let's look at market structure. And now for you to look at market structure, the market moves in only two directions. At most, it has two ways that it trends. It trends up, moving higher high, higher low, higher high, higher low, higher high, higher low. Now we have the high or a low point here. This low point is a 1 point what? This is a low point. So this is what we call a low. Over here, 1.3474. Let me check on my trade. Still consolidating. And this is what we call a higher high. This zone, higher high. And then we are going to represent higher high with HH, right? And this side is our higher low. Because why is it called a higher low? Because price has moved lower, but it's still higher than this low. Realize that this is a 1.34744, and this is the price of this side. It's a 1.34742. So it has moved by 2 points, so it's higher than this low. That's why we call it a higher low. And this side, this high, this side, which is this new place that my cursor is at, it's also higher than it. So that one becomes another higher high. So when we are in an uptrend, this is the structure of an uptrend. When we are in an uptrend, the market makes a series of what? Higher highs and higher lows. Basically, that is it. So you will label this is the uptrend market, right? Very simple. Now this is one market structure. And we have another market structure, which is the downtrend. And then the downtrend is just the opposite. It starts from the up, so just like the way the bearish candle opens, right? Starts from the top, opens from the top, and then closes at the bottom. So this makes a series of what? Lower highs, lower lows, lower highs, lower lows. Simple. Very, very simple. All right. So that is basically it for the so we have a lower low here. Lower high. And just like the first one, this becomes another lower low. So something like this. And so in a downtrend, the market makes a series of lower lows and lower highs. Now there's also another market structure that has a very nice movement. Let me just check on my trade as I'm here. I have SL to entry, so if you didn't get a good entry on this, please protect yourself, right? So now let's move on to the third one, the third type of structure. This is a structure where market isn't trending. Market is moving in two same direction points. Market isn't doing much. This is what we call a consolidation, right? So in this market, price is at a high and price is at a low. We have a low point here. This is the basis of what? Supply and demand. Where if market gets to a point where there are more buyers and there's more buying orders and more buying pressure, it pushes price to move back up, and then it gets to a point where there's what? Selling pressure, or there are more sellers and selling orders, it pushes price down. All right, so this is what happens in the market most of the time. And then for the most part, the market is consolidating, then the market is what? Is trending. And most people do not trade in the ranging market, or what we call a choppy market, right? Since most people are not trading in a choppy market, and then the market is mostly choppy and it is trending, how come most people are trading more? It's a question to ask, right? Okay. So now how do you identify market structure? Now there are two ways. For example, in an uptrend, there are two ways. There's a break and retest strategy. I think let me use black. All right. In an uptrend, we have this. And the market comes down. By this time, you should know higher highs, higher lows. And then market comes here. Or price comes there. And then price comes here. Now, you realize that over here, this place was acting as what? Resistance. And then what? At this point, it pushed price down. But then, price managed to break out of this red box that I have here, that I am labeling as well, buying resistance. And then price came back down to retest this zone. Now, this is what we call the break and retest strategy. So this same resistance became what? A support, a demand zone for price to what? Push back up. And then this is one way to look at market structure. And then it's going to happen similar countless times, right? For a continuation. And then it happened here. This was resistance and this side became what? Support. Now, this is what we call the break and retest. Now, how do you know that the market is going to break and then retest this particular zone? Now, there are a few things that come into play when we are doing this, right? Now, for the break and retest, whenever there's a break, the break is longer. For example, the break is very long. It moves, price moves high, and then now it pushes back down. Now there's another way that we look at, which is the break of structure way. Now price moves higher, high, and then comes to a higher low, and then does this, manages to break just a little bit more, and then comes down, and then comes to retest. And then does this, what we call break of structure, comes down again, So this is what price would be doing, right? So the BUS. So this is the break of structure, and this is what we call the BUS. We have the BUS over here. So now the difference is that with this, it just breaks a little and then reverses sharp into what? A demand zone. So you realize that they come to the initial point where price was. So the move that started and then was able to cause the break of structure is where price returns to for liquidity. So it comes there for liquidity. If there's any liquidity there, comes there and clears. So there's liquidity here. there's liquidity in this, and so you realize that this move, this point over here, this point that I'm going to circle, there's a point where what happened here? It's the point that caused this whole move to break this structure. The break of structure is when price moves above a resistance zone, so a turning point. This side was a turning point, and it was a resistance zone, so price has been able to break, so it has broken structure. Structure is just turning points in the market. So what is happening at turning points in the market, basically? So structure is basically the skeleton of the movement in the market, right? And it's so then that the what is happening at turning points is what forms the skeleton, what forms the whole body, the whole play of what price is doing, right? As technical analysts. So over here, what do you expect price to come to? Price is going to come to this zone, this whole zone, and this is what happened over here, right? So we have two ways. With this, we are not looking at continuing the trade over here after the break of structure. We are expecting that price should come back to the demand that pushed up and then created this break of structure. That is it. Now, since we've learned this, how do we identify that the market is going up? Very simple. Trusted. Now, when the market is making a series of higher highs, higher lows, you're just going to see that the market is going up. Now, how do you identify where to enter? That's what we are teaching here. Now, if you see that price breaks out from a resistance zone, first thing you have to look out for your zones of what? Resistance, where also known as your supply zones, and then the zones of demand, right? Now, when you are able to get this, now you are waiting for two things: a break, mostly react towards what price is doing, know what you want to do, and then react towards it, right? So wait for market to get to any of these zones. So for example, over here we have a demand zone over here. This is the blue zone, and then a supply zone where I'm representing with red, with a red rectangle. Very good. What are we going to do next? Wait when market breaks. This time market didn't come here. Market came here. The market price got to what? The resistance zone, which is this side, and then broke out, came back, and then retest. Now there are two ways. After this break, there are two main places where you can get a trade. Now you can get a trade at the retest of this previous supply zone, 10 demand zone, and you can also get a trade over here. But then you need some confirmations over here to then trigger an entry. Right. So what next? If you don't get the confirmations here, there are a lot of people. You can use candlesticks, you can use chart patterns. There are a lot of confirmations. I also have my main confirmations that I use. Candlestick and chart patterns, they are basic. They also work. I'm not gonna lie, they work. Oh, slow. Price is back at my entry. Uh, I'm out of this trade, guys. Price just came back to my entry. So let's move on. So like I was saying, there are confirmations that I use to enter. If you also here initially, I told you that what there's liquidity right below this. So I'm out of this trade, so I can take this off. I was telling you guys that there's what liquidity here. So for a trader, you just have to wait, or then try and get this trade over here. All right. Okay, so now let's look at market structure. This is actually a good place for you to enter buys, but then your SL should be below the structure, right? If so, at the 61, your SL shouldn't be below. So minimum you can get 1:2, yeah. One is to two on this trade, right? So now let's go identify some break of structure zones and then zones of what? The London session was very choppy. But not bad. So your SL should be below this zone. Way below, so somewhere around 1.34480, right? Hold on, guys. I need to check on my trade. All right, guys. We are back. So we are still bullish on GBPUSD, right? So now let's identify the market structure right here on GBPUSD. Oh no, I think let me use a different broker so we can still track our progress. So basically, I start from the I use daily and I move on to the 4 hour. Now on the daily, what am I doing here on the daily? This is the daily time frame, right? What do I do here on the daily? Same thing, map out where the candlesticks are moving towards. So same thing, I'm doing something like this. I can move here. Just tracking with my eyes. But so you guys can know what I'm doing with my eyes. So you guys can see what I'm doing with my eyes. So I'm just using this Okay. So right now there's this break of structure here, right? This. So we're moving up, came back down, and then we move all the way up here, which is this new break. And it's also, I think it's higher than there. And then we came down to retest. Now we are here. So from everything that I've seen, all that I'm taking is this side to this side. And if you remember what I said earlier, this side, if you remember what I said earlier, there was a small break, and the break wasn't that much. And if the break isn't that much, what do we do? You know that this is what a break of structure. This is a BOS right now. So what am I expecting? Price coming down to the demand zone that caused this break of structure, and price came around that area, and then it's moving up. So over here, I am still bullish. And then now I move on to the 4 hour, right? So 4 hour, I am looking at more current price, right? What price is doing. So what do? I just map out again with my eye. And then we come all the way down here. Now, one secret I can give you guys is that consolidations inform what? That there is liquidity. So over here, there's liquidity here. When you see that the market is ranging, there's going to be what? Stop losses right beneath it. That's one thing that you should take notice of. So anytime that you see that there is a break of structure to the upside like this, which broke all these lows, let me select it. This low, this low, this low, and then market started pushing towards the upside. There was an imbalance here. Don't call it fair value gap. Right, don't call it fair value gap. But there was this over here, an imbalance, and price came down. Price moved to that side, and then the push price back up. So for the 4 hour, it's still bullish. I am still bullish until this side is out. This is what we call internal structure, right? This downtrend, small downtrend over here. So we call internal structure. So I'm very bullish. I'm very much still very bullish. Over here. Then I move on to my 1 hour. Then from my 1 hour, I just check the market structure, which is not clear. It's an aggregate of what is happening in the lower time frame. So since I am bullish from the top, the higher time frame, that's what I mean by the top. I just track this side, what's happening on the markets over here. So market came all the way here, came all the way here, good, down. Now for this side, details are important. So you realize that initially we were looking down, but now it created something like some form of a head and shoulder. If you traded chart patterns, but there's not a head and shoulder pattern that we should use as a bias or based on just this to buy. No, don't do that. So now we broke out of this zone, and then we came here. So this morning I was looking at this. To take my trade, I was looking at something like this. I was looking at something like this. So this was my current resistance zone. This zone over here. or supply zone, right? And then price broke this zone. So what price movement or what structure was able to break, which is this swing over here from 1.34514 all the way to what? 1.3482, right? So what do? I am looking for reversals, right? A point where what price is going to retest. Sorry, not reversals, but retest. So what I do? I pick my fib. And then I am looking at a point where I'm going to have what? A demand zone. So what is a demand zone? So for example, this is what we call a breaker block, which is a demand zone around my 61% and then my 78. So I took my first trade on the demand zone, and this is another zone where I'll be looking out for another trade would be here, but I'm out of this trade, unfortunately. Sorry. So over here we made, let me see if we're able to get 1:1. No, we made 1:6. Okay, we are still in. I have to take this trade. So this is why I was taking this trade. So for me to be out of this trade, I would be considering what? Price breaking this low. And if price is able to break this low with a candle around, let's say the 1 hour candle breaks and then the body stays outside of this zone, I'll be looking out for sales. But until then, I am still in for buys. I'm in for buys, right? So this is basically it for today and today's market structure. Nothing much, nothing fancy. So if you didn't get in the trade over here, another point where you can get in this same trade is around the side. After here, price can work. Come and then come all the way here, from here, dip here and then move. So your SL last should be here. Your SL shouldn't be below here. After this side, call it quits, we are out. That's 1.34459. All right. So the market is just giving us opportunities to enter again and again. I am out and done for the day. So if there are no questions, I'll be ending today's stream at 2:25. Let's enjoy music till 2:25.